advisors, I'm super excited to introduce you to Elements in Real Life. This is a series of videos we're putting together to help you better understand how to do financial planning with Elements. Each week, Elements advisors will take real client questions and show you how they use the vital signs to provide real advice. So check it out, and of course, don't forget to like and subscribe.
Hey everyone, I'm Michael Reynolds with Elevation Financial.
And I'm Becky Walsh with Oak Maple Finance. And Michael, you said that you wanted to talk a little bit about insurance rate today. So tell me about the clients.
I use Star Trek characters as my demo account here. So we're going to talk today about William Riker and Deanna Troy and their son Thaddeus. So this is the profile on the client. As you can see, we have one-page plan information over here, travel the galaxy, explore strange new worlds, some goals there, some next steps in place, and immediate family information. And as you can see, our scorecard is in the middle, complete with household income, annual spending, some assets and accounts. So Becky, first thing I want to ask you is, what jumps out at you about this scorecard if you were going to poke at some things that you would want to ask about or have concerns about?
Well, I just start looking at it and I see, all right, so we have William, Deanna, they're in their mid-30s. Thaddeus is 8. So for a household of that size and that age, I see a total term of 14. And I'm thinking, all right, you guys are on your way. You've made financial choices that are setting yourselves up for success, and you're pouring a ton into your retirement savings, which is great. And let's talk a little bit about, is that setting you up to explore strange new worlds in the galaxy in this phase of life where Thaddeus might be pretty excited about exploring the galaxy? And so I would want to ask a little bit about how that spending feels for you, and if you're feeling constrained a little bit in that spending to not be able to travel the galaxy. So anyways, that's what jumps out at me, Michael. But I know that you mentioned that that insurance rate there at 12%. That seems low also. So let's talk about that for a bit.
Yeah, so I love looking at the insurance rate because, as you know, it's very common for families to find themselves underinsured when it comes to their life insurance or disability, potentially umbrella insurance. And so the situation we've got here is we've got a dual income household. So we got dual income, Deanna and William. We've got a minor child as well. So pretty good case to kind of dig deeper in insurance coverage. So if we look at the insurance rate, it is 12%. That's considered low. We want to have definitely a higher rate. And so let's click on that and see what we have here. So when we're looking at insurance rate, what I'm seeing, and jump in with your comments as well, Becky, but what I'm seeing is, we've got William Riker has $1 million in coverage, and his need is a bit higher than that. So he's at a 61% insurance rate. So if we look at the need here, that's calculated by looking at total net worth, spending needs, do the difference, and there's the need calculated there. So really, we would want to see about 1.6 million in term life insurance on William Riker. And then we look at Deanna Troy, no insurance in place at all. So her income also needs to be protected, and there's no life insurance in place. So again, that calculation there kind of helps with that need. So we are seeing—
Michael, I'm going to interrupt you here for a second. Just remind us how Elements is determining that spending need. Have you inputted that number, or is Elements and generating that from the annual spending?
Yeah, we do input that number. So that, it's generated from the spending that we've put into Elements. So in the annual spending number, we enter that in, and that's what's used here.
Great. Yep.
Yeah. So right off the bat, both of us are probably going to say, hey, we should consider more term life insurance for both of you.
Right.
And then if we look further down, we've got disability insurance. And this is a pretty common scenario I see with a lot of people, is there's no disability insurance in place.
Absolutely.
So that's definitely important, because as a Starship, commander, we want William Riker to have disability insurance in case something happens. Also, Deanna Troy running a counseling practice, want to make sure that her income's protected as well. So disability insurance, ideally own occupation. So, that's calculated there as a 0% rate because there is no disability insurance in place. And then further down, liability insurance, also no professional liability insurance in place as well. Umbrella insurance would be kind of the insurance to consider here, and with a net worth of over $1 million, there's nothing in place. So that contributes to that low percentage rate of insurance. So,
and umbrella is so often overlooked, and it can be so inexpensive, but really can save people's bacon if needed. And so that is one that's such low hanging fruit that people might not think about advisors helping them on. It's not a high cost with a pretty good return there.
Yeah, exactly. And what I think is nice here is the percentages in the scorecard are really visual and interesting to see, because you can say, hey, 12% insurance rate, we want to get that higher. That's a very easy number to talk about. And by implementing or helping the client implement, term life policies, get disability insurance in place, they can actively see that number increase. And that's going to feel good.
Sure.
They're going to feel like, hey, I've made some progress and I've got better protection for my family. And it's very visual.
I also love that. So 12%. That's a number that people can wrap their head around. 12% of 100, something easy to imagine. Say you need $1 million more in insurance. It's really hard to imagine $1 million. And that can, people's brains turn off at big numbers. And big numbers are just really hard to conceptualize. So both with every element on the scorecard, it's a number that's manageable for human brains to conceive of, and that needing to increase that insurance term is one of the really obvious ways that you can provide value to these clients.
Right on. Anything else you would add?
I would not. I guess I always want to know more about every number on a sheet I look at. So I want to know, okay, where is that spending going? Is 90,000 the right number? Because when I look at that, the row in the middle, that doesn't add up to 100% there, and savings rate, burn rate, debt rate, and tax rate. So where's the rest of the money going? I have millions of questions, and that's what I love about Elements, is they can answer them all.
Absolutely. All right. Well, great discussion today, Becky. Appreciate your thoughts.
Thank you, Michael. I enjoyed talking to you.
Absolutely.
So what did you think about that? We'd love to hear your thoughts about how we answered that question. Do you think that you would have answered it differently? Comment below and let us know. Now, if you have a scorecard that you want us to dissect, or a client question you want answered using Elements but aren't sure how, send us the client's one-page plan to cs@getelements.com. We hope to catch you next time.